stop everything you are doing. If you are watching this, you are witnessing the definitive end of a financial era. While the mainstream media was busy obsessing over political theater in Washington and distracting the masses with bread and circuses, the tectonic plates of the global markets just shifted in a way we haven't seen in over a century. On January 7, 2026, the impossible happened. A financial event so profound occurred that it marks the violent birth of a new monetary order. Silver, the element argentum. Number 47 on the periodic table, a metal mocked for decades as the poor man's gold, just flipped Nvidia in total market capitalization. Let that sink into your bones. Nvidia, the poster child of the artificial intelligence revolution, the darling of Wall Street, and the supposed god of the 21st century tech boom, was just run over by a freight train of physical reality. For 15 years, we have lived in the everything bubble. We were told that data was the new oil, that AI was the new religion, and that physical assets were merely pet rocks left over from a primitive past. But as of this morning, that narrative didn't just crack, it shattered into a million pieces. The smart money, the sovereign wealth funds, the central banks, and the billionaire family offices has officially pulled the plug on the digital illusion. The great rotation from pixels to atoms has begun. This is not a drill. It is a declaration of war between a debt-based paper system and a resource-based physical reality. Today, we dive into why the $80 silver you see on your screen is the biggest bargain in human history, and why the March delivery cycle is about to trigger a global financial force majeure. The catalyst for this earthquake began during the early hours of the Asian trading session. While New York was asleep, a massive wave of institutional buying flooded the markets, pushing silver's total market capitalization to a staggering $4.65 trillion. In one swift move, it eclipsed Nvidia, reclaiming its throne as the second most significant asset class on Earth, trailing only gold. But the real story isn't just the price, it's the systemic failure occurring in the plumbing of the market. We are currently witnessing a run on the bank in the physical silver market. To understand why this is a crisis, you have to understand the COMEX calendar. Historically, January is a non-delivery month, a ghost town where trading volume is low and almost no one asks for physical. Metal traders usually roll their paper contracts forward to March. However, 2026 has broken the script. In the first 72 hours of January, 4,697 contracts stood for immediate physical delivery. That represents 23.5 million ounces of silver being drained from the vaults in a month where nothing was supposed to happen. This is the equivalent of a massive line forming outside an insolvent bank at 3 a.m. The data shows that J.P. Morgan, the custodian of the world's largest silver hoard, was forced to issue over 60 delivery notices in a single day. They are raiding their own strategic stockpiles just to keep the lights on and prevent a total market default. The paper wall that suppressed silver for 50 years has been breached, and the smart money is no longer asking for cash settlements. They are demanding the bars. The geopolitical squeeze, silver as a weapon of war. Why is silver suddenly the most hunted asset on the planet? It is because silver is the Achilles heel of the modern Western economy. We are currently in the midst of a great resource war between the United States and the China-led BRICS Plus bloc. China has realized that they don't need to win a hot war if they can win the commodity war. Silver is the indispensable oxygen of the future. You cannot have an AI revolution without silver. You cannot have a green energy transition without silver. You cannot build a modern military-industrial complex without silver. By hoarding physical silver and draining Western vaults, China is effectively cornering the market on the 21st century. If the West loses access to physical silver, the Green New Deal dies, the AI data centers stop expanding, and the defense industry faces a catastrophic bottleneck. The forensic math, the great inflation lie. The mainstream media will tell you that silver at $80 is expensive. This is a mathematical deception designed to scare retail investors out of their positions. To find the truth, we must look at the inflation-adjusted reality. In 1980, silver hit a peak of $50, but what was $50 worth in 1980? You could buy a decent house for $60,000 and a new car for $5,000. Today, those same assets cost 10 times as much. If we use the government's own CPI, Consumer Price Index, The 1980 high of $50 is equivalent to $170 today. If we use shadow stats methodology, calculating inflation the way it was done before the government changed the rules to hide the truth, that 1980 high is equivalent to over $400 an ounce. At $80, silver is the only asset in the world trading at a massive discount to its price from 46 years ago. Real estate is up 10x. Stocks are up 20x. But silver is still coiled like a spring, trading at less than half of its fair value. A move to $200 isn't a moonshot. It is simply a mean reversion to historical purchasing power. See the death of counterparty risk. The flipping of Nvidia represents a fundamental shift in what investors consider wealth. For 15 years, wealth was a digital entry in a database. But as the U.S. national debt climbs by $1 trillion every 100 days, the counterparty risk of the paper system has become terminal. When you own Nvidia, you own a claim on a company that relies on the CEO's sanity, the power grid staying online, and the SEC's regulations. When you hold a physical ounce of silver, you own an atomic reality with zero counterparty risk. It does not require a central bank to print it, a CEO to manage it, or the internet to be functional. In a world of $36 trillion in debt, the only honest thing left is a bar of metal. The March deadline, a mathematical trap. The bullion banks and the shorts are currently trapped in a cage with a hungry tiger. They have sold hundreds of millions of ounces of paper silver that they do not physically possess. They assume they could always settle in cash or find metal in the open market. But the open market is broken. Premiums are skyrocketing, and the January anomaly has stripped the banks of their buffer. They are now heading into the massive March delivery cycle with an empty cupboard. If they try to buy silver to satisfy the March contracts, the price will go to $200 overnight. If they don't buy, they default. We are looking at the potential for force majeure, the point where the COMEX admits the vault is empty and tries to rug pull investors by offering devalued cash instead of the promised metal. We are no longer in a period of speculation. We are in a period of exodus. The flipping of Nvidia was the ultimate market signal. It was the moment the world realized that you cannot eat an algorithm, and you cannot build a future on debt alone. The great rotation is accelerating at the speed of light. Trillions of dollars of paper profits are trying to squeeze through a tiny exit door into the physical resource market. It is like trying to push the entire volume of the Hoover Dam through a garden hose in a single second. The pressure is explosive, and the walls of the financial system are starting to buckle. The bullion banks have less than 60 days to find metal that does not exist. They are frantically calling refineries and mines, but the supply has already been spoken for by the East. If you are waiting for a pullback to the old days of $20 or $30 silver, you are betting on a world that has already passed away. The air pocket between $80 and $200 is empty. Once the market realizes that JP Morgan is scraping the bottom of the barrel, the panic will go exponential. The masses will wake up. The fear of missing out, FOMO, will kick in, and the dealers will hang up the sold out sign. So, I leave you with one question. When the March deadline hits and the paper system finally decouples from reality, what will be in your vault? Will you be holding the pixels of the past overvalued tech stocks and devaluing dollars? Or will you be holding the atoms of the future? The script has been flipped. The silver age has begun. Secure your position now while the exit door is still ajar. This is the rotation of the century. Don't just watch it happen. Be part of it.
Stop. Take a breath. Look at the markets around you. Nvidia is breaking records. Bitcoin is making headlines. The S&P 500 is partying like there is no tomorrow. But amidst this cacophony of greed, there is a silence. A heavy, unnatural silence surrounding one specific asset. I'm talking about silver. To the untrained eye, the silver chart looks dead. It looks stable. It looks like an asset that time forgot. But if you have been in this game as long as I have, you know that stability is a lie. In the financial jungle, when the water recedes from the shoreline, it doesn't mean the ocean is calm. It means a tsunami is building. Wall Street wants you to look at the price tag, let's say $30, $32, or whatever the algorithm decides today, and believe that is the value. They want you to believe that silver is abundant, that it's just a pet rock for conspiracy theorists, but they are lying to you. We are witnessing one of the greatest misdirections in financial history. While the paper price on your screen is being suppressed by high-frequency trading algorithms and massive short positions, the real metal, the physical bars, the coins, the industrial grain, is vanishing. It is being drained, it is being hoarded, and it is happening right under your nose. This isn't a market correction. This is a crime scene. And today, we are going to walk through the yellow tape, ignore the mainstream media's distraction, and look at the blood on the floor. Let's put on our forensic gloves and dig into the mechanism of this fraud. We need to talk about the rehypothecation of silver. It's a fancy word, isn't it? But in simple English, it means selling what you don't own. If you look at the COMEX, the Commodity Exchange, or the LBMA in London, you will see millions of ounces of silver being traded every single day. Volume is high, liquidity looks deep, but here's the dirty secret they don't want you to know. For every single ounce of physical silver sitting in a vault, there are upwards of 200 to 300 paper claims floating around the market. Think about that. 200 people hold a piece of paper that says, "I own 1 ounce of silver," but there's only 1 ounce in the vault. What do you call a bank that lends out the same dollar to 200 people? You call it a Ponzi scheme, but on Wall Street, they call it futures trading. My team has been tracking the registered category in the COMEX vaults. Registered means silver that is actually available for delivery, silver that can be bought and taken home. That number has plummeted to historic lows. It is hemorrhaging. The vaults are bleeding out. So who is selling? The commercials, the big bullion banks. They use massive spoofing orders and naked shorts to slam the price down every time it tries to rally. Why? Because if the price rises too high too fast, their short positions will blow up. They are trapped in a cage of their own making. They must suppress the price to survive. But here's the catch. You can suppress the price of paper indefinitely. You can print unlimited contracts, but you cannot print metal. Eventually, the physical buyers, the people who want the actual bar, not the paper receipt, will show up at the counter, and when they ask for their silver, the teller is going to look at the empty vault and panic will set in.
Now let's zoom out. Why is this shortage absolutely inevitable? Why is this different from 1980 or 2011? Because the world has changed. Silver is no longer just money. Silver is the strategic imperative of the 21st century. We are moving into an era of the electrification of everything, and physics dictates one simple truth. Silver is the most conductive metal on the periodic table. You cannot cheat physics. Solar energy. The world is racing toward net zero. Solar panels are being installed on every roof from California to Shanghai. Newer, more efficient panels, like TOPCon technology, use twice as much silver as the old ones. The solar industry alone is swallowing nearly 20% of the annual mining supply. The AI revolution. You think artificial intelligence is just software? Wrong. AI runs on chips. It runs on servers. It runs on massive data centers that require complex electronics. Every single connection, every switch, every motherboard contains silver. The military-industrial complex. Do you think that Tomahawk missiles and smart drones being used in global conflicts run on copper? No. They require the highest quality, most reliable conductor, silver. Here is the connection that should keep you awake at night. Silver demand is inelastic. What does that mean? It means Apple doesn't care if silver is $30 or $300 an ounce. There is only a tiny amount of silver in an iPhone, but without it, the iPhone doesn't work. So if the price triples, Apple must pay it. They cannot stop production. The same goes for Tesla. The same goes for Raytheon. We have a situation where demand is non-negotiable and growing exponentially, while supply is stagnant. Mine production is flat, grade quality is dropping. It takes 10 years to bring a new mine online. We are entering a structural deficit. We are burning the furniture to heat the house. The surface stockpiles are gone. And now, nations like China and India are quietly sweeping the market, importing massive tonnage, draining the West of its real wealth. They know what's coming. They are exchanging their paper dollars for hard assets before the music stops.
So, how does this movie end? It doesn't end with a whimper. It ends with a violent repricing. We are approaching a singularity point, the short squeeze of the century. Imagine this scenario. The Federal Reserve, panicked by a recession or a banking crisis, cuts rates aggressively. The dollar index, DXY, begins to crack. Suddenly, the safe haven trade wakes up. Investors rush to buy silver. But this time, when they call their broker to buy physical metal, the broker says, "I'm sorry, there's a 6-week delay." Then it becomes a 3-month delay. Then it becomes unavailable. Premiums on physical coins will skyrocket to 50%, maybe 100% over the spot price. The disconnect between the fake paper price and the real street price will become undeniable. At that moment, the industrial giants, the Samsungs, the LGs, the solar manufacturers will panic. They won't buy to speculate. They will buy to keep their factory doors open. They will bypass the futures market and go directly to the mines, offering double or triple the market rate to secure supply. The paper market will break. The COMEX may declare force majeure, a legal clause that allows them to settle your contract in cash because they don't have the metal to give you. They will hand you worthless dollars and keep the silver. This is the super spike. We could see silver move $5, $10 in a single day. The gold-to-silver ratio, which is currently sitting at historically absurd levels, around 80-1 or higher, will collapse back to 40-1, maybe even 20-1. That means silver will outperform gold by a factor of 3 or 4. I don't predict the future. I analyze the crime scene of the present so you can prepare for the verdict.